welcome traders. So it is Sunday the 12th of June 2022, and I'm preparing this as my week ahead, obviously for Monday, commencing Monday the 13th of June. So just having a look at volatility, I think is still, when I say volatility, I'm not referring to the VIX here, I'm saying to general market volatility, choppiness, where the market might turn back on itself, all kinds of unpredictability where strong trends can suddenly break. And so just talking about that. We're still in that state. That's where I think we are. But just having a look at the major news coming out this week. So all eyes are definitely going to be on all countries with regards to anything related to inflation. That's the global fear. It's not particular to the US alone, or it's not unique to the US alone. And so just having a look here, for example, we've got FOMC the coming Wednesday. There's no doubt that the market is going to be moving towards that Wednesday. It's going to be heading up towards that, trying to decide how it's going to respond. And there's probably going to be some incredibly high volatility. And so I would just be prepared for that and making sure. And also keeping an eye on the yen pairs with regards to the Bank of Japan's possible intervention. Just being very cautious with regards to exposure to those. They're just particularly high. And then, as I said, anything in here that speaks, especially dollar stuff, is gonna just mess the market around quite a bit. Okay, so that being said, these are all the major ones. I'd keep an eye on that. Wednesday is going to be volatile. And I actually think the run-up to Wednesday is going to be especially volatile as well. Okay, looking at the charts, kicking off with the VIX as well. Nothing has changed here. The chart that actually should be monitored the most is the weekly chart. Why? Because here we can see there is a consistent, we came from a downtrend, bottomed out, and we now have a consistent uptrend of high lows, high highs. And basically the expectation here is to stay in this region, and to continue up. But as long as I've been analyzing and including the VIX within my market analysis stuff, it's, even when we've got into higher volatility periods, the market behavior hasn't been especially crazy. And we've had periods where it's had low volatility, and that's when the markets have had some big drops down. So for me, I just want you to observe there is a trend at the moment, and I expect this to stay the case for the rest of 2022. I think it's fair to say that that's going to likely be the case. Okay, next one up, the dollar index. So the dollar index, and again, the weekly chart is the magic one here. Weekly chart has a very strong, healthy trend, pulled back, produced a small bullish candle, and then continued up and closed near the highs. Okay, that should give you an indication of how strong the overall, we're still within that trend. That's basically what's going on. We're still within this trend, and it's really, really strong. The monthly is a little bit frightening in terms of the fact that it's moved this far. It had a solid rejection, which was fair enough, and I think a very balanced, or I think in most cases a rejection of that sort would have resulted in a return to the range, and yet at this point it's still going on. This is still not a guarantee that it's going to break out. It could still have a second rejection, and again, if we have another rejection at this high, then I think it's very likely we're going to come back within that. But nothing has really changed. If you're listening to the news, the fears are still the same. Russia's still invading Ukraine, it's still at war, it's still losing to Ukraine. Tensions are still high. We still have COVID issues. None of that's really changed, and therefore there's nothing at this point, that would indicate that these conditions are likely to change. Okay, so then moving on to euro dollar. So it's fair. Okay, and we'll have to see how it goes with regards to FOMC. But it's fair at this point to expect that the market is going to continue to push down. And in fact, it might even do something very aggressive and push all the way to the very edge or beyond it by the time, Monday, Tuesday, Wednesday, push all the way to there, and then possibly have a rejection, something with regards to FOMC. We know that the rate hikes are there. In fact, we know they're probably going to ramp up the rate hikes. And so we know that, this is all just to curb the inflation. They just want to see inflation slowing down, just that, and then everything will calm down. But that is really the biggest kind of thing, and other countries are doing it as well now. So if you look here at cable, my expectation, there's no reason why at this time it isn't going to potentially push right to the edge and then wait for FOMC, and then depending on what FOMC does, it could break out. So if we're going to have a look, go back to that dollar index, we could see a breakout beyond that to all-time new highs. If the Fed does something that's quite controversial, that could be the case. Alternatively, we could just yet have another rejection, and as I said, it could then be a double top, and then we get that reversal, which then gives me a nice little plan for the coming months where there could be a nice weakening dollar and some really good money-making opportunities on trends on those. But plan A, expecting that stronger dollar, nothing just yet, and then plan B is if it's going to reverse. I mean, we've got some really strong standard, almost exactly what you would expect for price to do off those levels, but then no follow-through, and so that's really where that concern comes from. So expecting a stronger dollar and therefore weaker pairs against that. And so I'm looking for continuation trades on all the majors, really in line with a weaker dollar. Dollar yen as well, right up at its upper limit here. It's had no real correction. This is what I call a pause and a go. This one here is a pause and go. So we had a big move and a pause and a go. So my expectation is for this to continue, certainly back up to the tops of these limits immediately, but it is overdue for a correction on multiple time frames. In fact, I could be wrong here. That 4-hour looks as though that's building up to a potential breakout trade, which could work its way up to, say, 136. So it could be some good money-making opportunities, but it is heavily overextended and therefore very concerned about that. Dollar Swissy right straight down, pushing all the way back up, very much disregarding the last month's candle. But it doesn't mean we won't have another rejection when we get to those levels. Okay, so plan A so far, pretty straightforward, just trading in line with a weaker dollar. I would mention, however, in the weekly chart here on dollar CAD, a bullish engulfing candle. That's usually a very strong sign, and actually in line with an uptrend on the monthly. We've got high lows, high highs. That indicates a push for dollar CAD to the upside. It's very choppy, but it looks like there could be some reliable, relatively speaking, safe news to the upside there. Dollar rubles just producing a little bit of a double bottom here as well, rejecting those lows, but overall you can see it's kind of found its comfort zone at the bottom of this range for now. Interesting that it is strengthening, and now the 4-hour looking like it's going to take a bit of a bounce from that level, maybe head away a little bit. Okay, moving on to commodities. So commodities, nothing really a surprise at this point in time. We've had this breakout building up for a while now. We have broken out, pulling back here. I'm going to be looking for a bullish candle here and then a continuation to the upside. And then I want to see how this was originally a knee-jerk reaction, but prior to that, if you ignored this candle, all of this is pretty much in line. However, I would say at some point I do expect a weekly retracement to occur. What the market might want to do is continue up to the old highs and then produce a weekly retracement. Wheat was an interesting one where we had that strong rejection. So gold. Please take note, we do have a weekly downtrend, lower highs, lower lows. We have, I'm going to say a monthly uptrend, high lows, high highs. We've got an inside bullish candle at the moment. Okay, but look at this beautiful, really beautiful bullish engulfing candle. I would have preferred for it to close a little bit higher than that because this implies it's going to potentially come back into the range before deciding if it wants to push on a little bit higher. But this looks good. It looks like it is desperate to head on to 1900. So it's going to sit on my watch list looking for potential buy opportunities there. Let's have a look at silver and compare it. Silver's also produced a bit of a bullish candle off that, and so this could be a signal that it wants to hit a little bit higher. It's undecided on the weekly, so it's probably going to wait for that daily to make a decision. Look at that 4-hour candle, really strong. And the monthly, of course, just hovering around in this area. So we'll see. That's such a strong signal, it really should push higher. But I just kind of, with everything else going on at the moment, and also, again, I want to mention here that there's this urban myth, and it's the best way to describe it, that gold is this, that institutions and everything run to gold during periods of inflation. That may have been true in the past, but it isn't necessarily true these days. I know that there are hedge funds that offload gold when they need to, when there's, they've got their portfolios are just too fat, there's too much risk, they're stressing too much, they need to cash out of it, and so they just offload gold. That's usually the first thing they get rid of. So in fact, there could potentially be some sort of inverse correlation forming now because there are other, instruments. There's a shift. You can see that the correlation between bonds and equities isn't necessarily the same it used to be, and so I think we just need to be prepared that we don't know why necessarily we can't see the connections because it isn't a direct link, but might not be the case. Okay, so let's have a look. Copper also now actually looking potentially weak. So copper has formed a bit of a gravestone doji here, but within the bigger picture, it's not a huge clue. It might imply that if we break, we head a little bit lower, but actually it just generally means indecision. Natural gas edging up, but definitely producing multiple bearish divergences there, and so that looks as though that is, and you can see the exhaustion setting in here. This simply means it's going to stay in this area. Don't expect much for it to do, and you can see it's been moving and pushing back, moving and pushing back on the monthly. This is just overdue for a big correction. Okay, so natural gas showing a bit of exhaustion there. Crude oil. Crude oil looks fine. It's trending higher. Looks okay. It is interesting. You can see the candles underproduce some wicks here. So as it approaches the old highs, there could simply just be traders looking to extricate themselves from those positions. My expectation for now is that it's just going to keep trying to push a little bit higher, and there aren't any signs of any major rejections. Brent crude as well. Same thing. Same analysis. It's starting to come into indecision candles here, and these can sometimes mean that we end up getting a bit of a deeper correction on the weekly. So possibly we could get a weekly correction triggered this week on some of those energy commodities, possibly, but for the most part the trend to the upside seems intact to me anyway. Okay, sugar. So sugar, that's a really nice strong lower high, bearish close to the downside, implying that it intends to continue heading lower. Okay, so I don't expect much from sugar this week. Let's have a look at coffee. coffee within it. That's a strong, we had a really nice bullish candle here. This should be continuing up, but it's just failing at this point in time. That just says, if you want to know what that means, it just means lots of buyers down here and just not enough over here to keep it going over the line. So it keeps failing above this level, but there's lots of buyers in here until one side capitulates, until either the sellers get out or buyers jump in, or in this case, the buyers just step away and then it has a deeper correction. But yeah, looking at this, it looks like it's going to try and push a little bit lower as well. Wheat. Okay, so wheat had that just complete failure over here as well, but it's back into the moving averages, back off a level of support. Interesting to see if this is going to attempt to move higher, and then we're going to be producing a bit of a triangular shape there, which will ultimately probably lead to a breakout to the upside. Let's see, cotton. Cotton's just trying to carry on, but this exhaustion here is a big clue. Look at that major level there. In fact, I'm just going to just draw in a level here. Is that I do it? Is it this one? There we go. Yeah, really nice. So it's struggling in that area. So I don't expect much from cotton at this point in time. Okay, global indices. That data looks a bit funny. This looks a little bit odd. Okay, so this is the Dow. All right, so last week we spoke about the fact that the markets were looking like we were going to see a bit of a move to the downside. I'm kind of happy to see that this is still within, that we haven't created any historically new lows. When I say historically new, I mean from where we are now, from where we were last month. We're still within the last monthly candle. Excuse me, that's a good thing. What I like about this is I do expect it to come down a little bit lower potentially and retest that level and possibly reject it. So that wasn't as bad as I was expecting, and it pays to prepare for the worst and hope for the best. That's absolutely my motto here. So let's have a look at that. Let's look at the S&P. S&P is back down at this level of support. I need to see what it's going to be doing. Is it going to, are we going to be falling lower? I think we need to be prepared for that. It was a bit of a bounce back in the last few hours of the day. But I'm prepared effectively here for both things this week. There are times when I know the market's more bullish than bearish, and therefore I'm expecting bullish moves. Right now, I'm looking at it here going, okay, it did drop, it did kind of collapse a little bit last week, but I always have to now keep in mind as we approach major levels, we could have a bit of a bounce off that. And again, it's not necessarily something I would trade. Once we break through those levels, I'll be looking for additional shorts, then I'll be looking for shorting opportunities. But until we break through those levels, I actually look for bounces because I know that there's usually going to be buy orders sitting there. The point here is that all of these markets on their weekly are in isolation. If we were looking at gold, if this was gold or we're looking at euro dollar, this would be a trend continuation to the downside. But the dangers always approach as we get to these levels here. Look, what is kind of interesting here is we did close near the low there. Okay, so, and trading halted as well. So I was traveling, to be fair, I didn't see how the markets went on that. I was traveling at the time. I'm back in London on Mondays. I'm back in London tomorrow. And so just trying to get a little bit of sunlight before I go back and experience an English summer, which could be an English winter, who knows. And it's not a dig, it's just experience speaking. So yeah, look, sometimes you can see when the market's putting the brakes on, but we need several candles, and unfortunately that means July and August. And we can have a particularly really nice, we could have a bullish finish, the likes of which we've never seen. We could finish the year up at all-time highs. That is a very real possibility. And so historically, that has been something that's happened in the past. Some of the biggest drops have resulted, 60% of the time in brand new highs by the end of the year. So I don't want to, we've had, COVID would have seemed, quite bad, and actually the market recovered really well. What we're seeing here, we look at the Nasdaq, and I realize I'm rambling a bit, so I've got to keep my eye on the time, is that we've seen tech stocks have taken a real hit, which is interesting to me because we don't use technology less now than we did 3 years ago. We use it more. And it's not, I don't understand it. It's just that, to me, I feel we're simply seeing more of a correction in line with their value, their true value. And so for me, this is something interesting. So one thing to keep in mind is that the market takes a while to bottom out before it can rebound. And so usually it's worthwhile for me to be patient enough to see a monthly bullish candle. To just let that happen, because if that's the case, then I still have time to get in and do that. But I have to say this week, I'm going to be shopping, and I'm not saying I expect this to be the market bottom, but I am going to be shopping around for blue chips. I'm going to be looking to see if I've got a bit of spare cash, anything that I can put into blue chips. Blue chips for me are like Costco and Microsoft and Amazon. I'm definitely going to be staying away, I think, for now from Meta. I just don't quite get the business model. I understand it's just a tricky thing for me. I'm a bit of a Warren Buffett. I'm a bit of a traditionalist. But absolutely, I'll be looking at, I'm going to start doing that now with the idea that this could be near the bottom, if not the bottom. But absolutely going to be having a look at that. The other thing I wanted to know is if you are interested in watching a live trading stream, like a YouTube live stream, or just like trading in the morning, why don't you let me know? By the way, I was going to say I'm using this new platform, well, the latest version of PROREALTIME. I just love it very much. I come from a sort of trade station slash e-signal kind of platform background, and I quite like this one. I'm very comfortable with NT4. I know most platforms, but this is version 12. This is a preview of version 12, which will be released in a few months. If you want to find out more about it, the link is I always keep the links for everything that I use in the bottom in the description. You will see the link here that takes you through to PROREALTIME if you want to find out more about it. So it's just for me, just such a great platform. It's intuitive and hotkeys and everything. The data is accurate. So that's what I like the look of. Okay, so let's have a look at some of the others. I need to go through these faster now. So mini Russell still looking like it wants to hit a little bit low. I'm going to keep an eye on these. The market could bounce. And again, the problem we have is that we have a massive news event in a time when there's certain periods in history when certain news announcements are more important than others. So, for example, if we're in a recession, then jobs numbers become incredibly important. Right now, we're bloated, and so we have inflation. So, central bank interest rates are really crucial. The market is hypersensitive to it. Okay, so that being the case, FOMC this week, which, by the way, never used to be as big a deal as it is now, but it's huge. So I'm very prepared for volatility to be insane until, say, Thursday this week, and to be prepared for that. The market could just push on. It could go to the edge and then push beyond it, or it could go to the edge and come back, or it could start reverting. You know, as news leaks out, as it does, rumors head out, whatever, we could see the market start to rebound from that. Okay, so FTSE as well. Bit of a correction, but look, within the bigger context, anytime we're still above 7,000, as far as I'm concerned, we're still strong because it took us like 30 years of range-bound behavior to get out of that. The DAX as well, pushing down to test these levels. Again, historically, we're still doing okay, but inflation is a real danger, guys. You need to be aware that inflation is one of the things that can kill an empire, so we need to be aware of that. What I would note here as well, nice little Euro stocks looking as though it's preparing to head a little bit lower. You can see solid rejection in the past, lots of buyers, but this could still go down as far as 400. So just trying to psychologically prepare myself for that. Okay, Nikkei starting to push up, push higher. That's fantastic. So that's really nice to see that, because if the market was in real dire straits around the world, we would be seeing similar kind of panic and fear around that. We're not seeing that at this time. The trick is to curb the inflation as quickly as possible. The longer the inflation carries on, the more other things start to go wrong. Other things, it's the more you ignore servicing your car, the more other things take wear and tear, and then eventually start to fall apart. The S&P out of Australia, also back down at these lows. I'm okay for this to come down to 6.5 and recover from that point onwards. These are the lows of COVID. The market is not, that was only 2 or 3 years ago. The market's had extraordinary growth in the last few years, almost too much so, and it got a little bit bloated and fat. Okay, so it needs to come off that. Okay, let's move into equities of interest. You can see Royal Mail not expecting much more for you. I'm expecting these to drip lower, essentially. Okay, let's look at Amex. Amex coming back down into these lows. This level of support could still hold this week. Like I said, if we get a push to new boundaries, I think if the language comes out of FOMC, that or any language coming out of any of these major press announcements, not out of FOMC necessarily, but just saying, look, the rate, is still going faster, and we're going to have to curb things, and you sense panic in their voices. There will be a market response to that. And we could even, if any rumors come out on Tuesday, the market could respond ahead of time. Super, super cautious. Smartest thing for me to do now would just be to reduce my risk or not trade at all, or just trade being prepared for the market to do something unexpected. Okay, Apple. So Apple's coming into this level. This is a strong area, and it could still hold. It only matters if it ultimately closes, and I mean closes below that. It doesn't matter. So I'm happy for this. I really like to see where this goes, and we'll see, because it could fall through by Wednesday, and then by Friday it's recovered and come back up, and it finishes with a bullish candle, and then next week, the week after, we recover. So yeah, sometimes, and I've seen this so many times, actually, I shouldn't say sometimes, so often I've seen the market just push, and you think, okay, that's it, it's just done, and then it reverses and comes back, and then the signal, the story has changed, the narrative has changed. ARK as well. Okay, so I think when ARK does recover, hopefully it's going to be a hefty recovery, as long as, and this is biased, as long as it's not too much of their equity, one of their constituents isn't too much of Meta. I need to go and have a look at that. So it's coming all the way back down to all-time lows. It's not a reflection necessarily. It's just a simple reflection of technology stocks. Okay, again, we've got AT&T back in this area with a bit of a reversal candle there. Could head a little bit lower there. Let's go to Berkshire Hathaway. Berkshire Hathaway is back into this area. The question is, can it find support here? But actually, again, for it to come down, this is the next level. So it's not the most accurate way of placing it for now. 270. I could still hold the support. So let's have a look at that. So this week I'm prepared for these to drop a bit lower. Interestingly enough, here we go. BP finding a bit of a struggle here. So it could be topping out. That's a bit of a potential bearish rejection at that point. We'll see. Daily has come back to a major level. It could find support here. It's gap down. Just mentioning the gap down there as well. Observation. Let's look at Exxon. Exxon looks a lot stronger. That daily looks super, super strong. Might just be wanting a weekly. I think let's be prepared for a weekly retracement. I notice how overextended it is on the monthly. It is ridiculously overextended. It is here, should be coming back down to 80. So let's see if we get a weekly retracement this week on oils. Cautiously then, so looking for the 4-hour trend to change. Looking for bearish divergence on the 4-hour. It could be setting up this week and then the next week take a move lower, but we're starting to show signs of weakness in crude oils as well as in the major guys. Okay, Coca-Cola. This is actually holding up really well, but I still expect this to possibly come down and just tap 60. We'll see if that's the case. I would like to see if I can get a slice of that. This is, you know, usual thing. General Motors actually starting to slow down over here on the daily. That is going to attempt to go a little bit higher, but if the rest of the market pushes down, it's just going to come down and tap that 32 level. So General Motors, best case scenario, it's going to go a bit sideways. JP Morgan Chase, big drop, close right near the lows. I think, you know, unless something can hold it above this level of support, I think we're going to head down a little bit lower to 106. Hopefully it doesn't. Meta is producing a bearish breakout pattern. This and the close, that solid weekly close near the lows, a lot of this indicates there's a very high likelihood to me Meta is going much lower down towards, potentially down towards 150. We'll see if that's the case. Morgan Stanley. Same situation. Morgan Stanley, if this level doesn't hold here, I'm expecting this to drop. It's starting to look a bit more bullish. That MACD is starting to push up a little bit higher. So it would have to hold at this level, produce a bullish candle, and push back up towards the highs by the end of the week. Let's see if that is going to be the case. It's in a great area to become bullish. It's really good there. But that strong level of resistance might mean that it needs a deeper correction. If that's the case, it could be heading down as low as 60. But I think it's going to really desperately try and stay where it is for now. Like bullish divergence here, for example, on Netflix. Netflix looks like it is just done. It's overdone. It wants to come back up to 250, interestingly enough. It's consolidating and going sideways a bit, so we'll have to see if it then starts to push near the lows. But it's showing here desperate multiple bullish divergence here means that it is really doesn't want to go much lower. Interesting. NVIDIA might just be coming back down to these old lows over here. We'll see if it can find some support. The green areas are actually areas where I looked at the yearly, quarterly, and monthly and found those are areas for me that would constitute a minimum retracement or a maximum retracement. So it's still within a buy area for me. So that's good. These are my, practice what you preach. These are ones that I'll go and have a look at. It's quite funny here. PayPal actually highlighted this as overextended. And so I've forgotten that. So that was a zone where it was overpriced. It's back down near the lows. Not much difference here between this and a lot of other tech stocks. Could be a good buying opportunity. It's got bullish divergence as well. Spider as well also has bullish divergence creeping in here. Something to look very bullish on these. But the weekly look bearish, dailies look bullish, meaning they might want to try and turn where they are. Not all of them look that way. Just that one. Spotify. Near the lows, same thing again. It's desperately trying to stay where it is. So some of these are giving off a little bit of a sense that they might drop a little bit and then try and recover and stay where they are. So kind of like they're trying not to step over the cliff edge. They're trying to stay where they are. Tesla's still in the blue zone, so that's also purchasable. To me, that's still value. Even down to this green box is value for me. The difference being probably monthly and quarterly charts where I'm looking at it on a bigger time frame. So we'll keep an eye on that. Stephen Graham, who does some, who I have solid respect for. He's a YouTuber as well. Stephen Graham does some. Is it Graham or is it Graham Stephen? I think it's Graham Stephen. I got his name wrong. So he does some things where he's concerned about how similar the S&P looks now versus other cases in the past, and so he's worried about the drop being decades long. I'm not convinced that's going to be the case. I'm not convinced that that's necessarily going to be the case. We shouldn't. We've got quite a few fundamental things that should be fine. But I guess the point is that because we're trading, we can make money from bear markets as well as bull markets. We just need to have a plan as to which market we expect to unfold this week and then trade in line with that. Okay, so Vanguard as well looking it's going to just, I think these levels of support are ones to watch. Can the market stay at those and stay above those? Okay, let's move on to, we're wrapping up now. We're in the last 3 minutes of it. It's good, actually. The 10-year T-notes still pushing lower. Not expecting much to change there, but you can see again bullish divergence here. What does that mean? The MACD is trending higher. We've got equal lows here. It really seems to want to reverse, and it's been here on the 4 hours. So let's see what is there, if that's the case over there. Almost as though there's a correlation now between these equities. Look at this. This is insanely overextended on that time frame. I mean, it's just, look at that. It's gone back to, it's gone back to periods. It hasn't been, this kind of far down since 2015, giving back a lot there. Interesting. It's good for shorting opportunities. The trends are nice and healthy and intact. So for traders, fantastic trading opportunities. Okay, cryptos, ladies and gentlemen, let's have a look at cryptos. Okay, so I spoke last week about how if equities drop, it's going to pull cryptos with them, which it is. They are linked, they are correlated, but they are trying not to fall as much. And that story doesn't change here. The story for me is that at this point in time, they are quite keen to attempt to stay back up above that level. So I'm interested to see if we get the case. If we end up with a bullish weekly candle this week, we'll have to see if that's the case. So when I started out, I was looking at the US indices, and I was going, look, they look heavily bearish. They look like they're going to keep going. And then as I go into equities, individual equities, and I look at certain things, I'm seeing potential levels of support, which I find quite interesting. But let's talk about Ethereum here, for example. There's no doubt, ladies and gentlemen, that Ethereum's level has not held, and it's coming back down. Where is the next kind of level that I would pay attention to? It's here. Okay, that's it. So that would appear to be where it's heading down to, towards a 50 moving average and a bit of a move. That's interesting. So that range-bound behavior has, so far, appears to be, unless, again, it reverses back into the range. So it's a false breakout, goes back in over the next, breaks out, and goes back in within the next week. Cardano, just slipping further down to these old lows. Again, I just can't help but think that there's some opportunities for me to have a look at buying pennies, even if I just put $10 in it. These for me are things, again, diversification is crucial. I think that it's, even, one of the most amazing investors, one up on Wall Street, Peter Lynch, he had just thousands of stocks that he had shares in. And he would repeatedly say, look, you don't have to have thousands, but you certainly might not want one, because if you put all your eggs in one basket, and what if that basket has a hole in it, which is kind of what happened to Cathie Wood's ARK, major hole in tech stocks. So it would seem to me that, however, there's an opportunity to get a little bit of cryptos, some stocks, any of these at prices that we might not see for a while. We'll see how that goes. But yeah, so again, I'm expecting these to, if cryptos are anything to go by, we're going to see the markets push lower, basically, I think, having a kind of summarizing this. Solana, they've kind of fallen through their levels. There's definite bullish divergence. This week, I would say, so last week, I thought it was highly probable that there would be a move lower. This week, I'm expecting the market to head lower. I know we've got FOMC, and I'm also expecting the market at the same time, potentially either pre-FOMC or post-FOMC, to try to climb. Excuse me. So what it could do potentially is that it looks all buoyant on Monday and Tuesday, and then heads down and finishes lower. So it's one of those things where I'm expecting the market, I can see both signs of bullish and bearishness, and therefore I'm expecting the market to either do a move down in the beginning of the week and finish higher after FOMC, or the other way around, possibly look a bit more buoyant in the early part of the week to offset this bullish divergence I'm seeing, and then finish lower. And so again, trade accordingly. This is what trading is. Trading is dealing with the potential for multiple outcomes. There are often times when I'm expecting a bullish, completely bullish all throughout the week, or completely bearish throughout the week. I'm seeing mixed signals here, and the market's obviously going to move. So the question is, how are they going to unfold? So I'm going to leave you with that and trade. I'm going to be obviously cautious this week, as I said, an ear to the ground with regards to Bank of Japan, potential intervention, keeping an eye on any panic or fear or acceleration of rate hikes or anything like that, basis points also throughout the UK, those kinds of things. They'll strengthen currencies. So currency markets are going to be very interesting to have a look at as far as I'm concerned. Some good potential trading opportunities in currencies the last couple of months, almost better than 2 years ago. I'm seeing some amazing stuff. So ladies and gents, please be careful, look after yourselves. Have a fantastic week, and stay sensible. And yes, there could be a silver lining here, and there could be light at the end of the tunnel. Thank you very much, and I'll chat to you next week.